right, let's bring in BMO Wealth Management Chief Investment Officer Young Yuma. Welcome. It's nice to have you on our program. You've heard what the ladies have had to say here about their views on this market. What's your own?
Yeah, thanks, Scott. It's great to be here. I think we're in a market now where we just have a very high degree of uncertainty, and it's going to be taken, the mixed data that we have is going to be taken in a glass half empty manner until the data starts turning more consistently positive. But it's very reasonable that we're in the last stage of a soft landing, that we get mixed data. But we have uncertainty about the Fed, we have uncertainty about the economy, we have uncertainty geopolitically and, of course, politically here regarding the elections. And that's just such a high degree of uncertainty when we're getting mixed data. And it's not really enough to generate momentum, we think, over the next couple of months. So we think we're in for a choppy couple of months, but we're pretty optimistic after that.
Are you still in the soft landing camp?
Oh, we are. We think we're very much in the latter stages of a soft landing. We think that the underlying fundamentals of the economy remain healthy. And we actually think once this rate cutting campaign by the Fed is further underway and we get maybe 100 basis points or more of interest rate cuts by the end of the year and into next year, we're actually going to see some positive economic surprises. We think that for the same reasons that the economy didn't slow as much from higher interest rates when the Fed was raising rates, that there's just underlying demand. And we think that underlying demand will start to come through once we get lower interest rates, because right now in the economy, interest rates are the problem. The underlying fundamentals remain healthy.
Does that suggest that you believe in this broadening story, which looked legit, and I think people are still trying to score whether it is or it isn't?
Well, we believe in it. We just think it's going to be on pause for a few months because this high degree of uncertainty we have right now. There's just too much that needs to be resolved over the coming months, and it will be resolved probably around year-end time. But right now, when we have mixed data coming in, it's just very hard for that broadening of the market theme to really gather momentum. But we think when we get those positive economic surprises into 2025 on the back of lower interest rates, that theme will reemerge. So we'd like to position for that theme and look for opportunities as we go into the end of the year, these last few months.
Anastasia, how do you view that? I feel like there's a good debate as to whether this is just too soon to go into. People come on, they say, yep, I like small caps and I like mid caps here. Yep. Because things are going to remain okay, and then they're going to get even better. I'm okay. I'm willing to be a little bit early rather than late. What's your own view?
I think we have an opportunity that may last a few weeks or maybe a few months, the opportunity to position for what is likely to be resumed as a soft landing. I think, as we all talked about, volatility does spike into the election, going into the election. Typically, the markets do consolidate the months right after the first rate cut. So I think we have this uncertainty also amidst the slowing economy. But if you look 3 months out, 6 months out, typically after the first rate cut and after the election, stocks typically do resume their upside. I'm in the soft landing camp. I don't think we have the debt overhang issues as we did in 2009, for example. So I think this can be a 1995 type scenario where what happens after the Fed actually cuts rates, financials outperform, healthcare outperforms, and cyclicals tend to outperform as well. So I think, Scott, the opportunity that I see in the market now, going back to NVIDIA and going back to the semiconductors, they've traded very poorly. Probably as they should, given elevated expectations and also the economy that's slowing. But if you fast forward, let's say into the end of the year or beyond, I think we have a great opportunity to be adding to those semiconductors on weakness. And Scott, we've said during the summer that we don't have a whole lot of catalysts past July because we didn't have conferences. We didn't have a whole lot of, earnings reports outside of NVIDIA. But what we have this week, we have the Citi Tech Conference. Next week, we have the Goldman Tech Conference. We're going to hear, I think, some reassuring commentary on the semiconductor side. So that's the opportunity I see to add.
Wow. So